So what if your next loan application didn't just ask about your income, but also took a deep dive into your personality? It sounds like something straight out of sci-fi, right? But it's a real strategy being tested right now. Let's dig into how psychometrics could actually be used to decide who gets a loan.
All right, so why would anyone even consider something so out there? Well, the answer lies in a massive and really persistent problem in our economy, something you could call the small business dead end.
We all kind of know this, right? It's a foundational truth of modern economies. Small and medium businesses are absolutely vital. I mean, they create most of the jobs, they drive innovation, they're the backbone of economic growth pretty much everywhere on the planet.
But here's the crazy paradox. Even though they're so important, countless promising small businesses just hit a total brick wall. They've got brilliant ideas, they've got that relentless drive, but they simply cannot get the money they need to grow.
So the real problem here is what economists call information asymmetry. Just think about it from a bank's perspective. They look at a new, small business, and they just don't have enough data to know if it's a good bet or not. The business owner, of course, knows their own potential, but for the lender, it's pretty much a shot in the dark.
And this right here creates that classic, the chicken and egg problem. Banks want to see a good credit history before they'll lend you any money. But how are you supposed to build that history if you can't get a loan in the first place? It's a super frustrating trap for so many entrepreneurs.
So, how in the world do you break this cycle? Well, this is where a really radical idea comes into play. A test of character. A totally new way to think about and measure risk that goes way beyond the typical balance sheet. And when you look at them side by side, the difference is it's night and day. A traditional credit score is like your financial resume, right? It only looks backward at what you've already done. But a psychometric test, that's more like a financial job interview. It's trying to look forward and predict how you're going to behave.
Now, a company called the Entrepreneurial Finance Lab, or EFL, developed a tool that basically boils all this complexity down to two really simple but crucial questions. First, can you repay? This looks at your raw ability. And second, will you repay? This tries to measure your fundamental integrity. So simple but incredibly powerful stuff.
Okay, that's the theory. But does any of this stuff actually work in the real world? Well, it was put to a fascinating test in an experiment down in Peru.
So here's the setup. A major commercial bank in Peru decided to pilot this EFL tool. They had almost 2,000 small business owners, all of them applying for working capital loans, and they had them take this test as part of their application.
Now listen to how they set this up, because this is the really clever part. The bank decided, hey, let's give almost everyone a chance. So if you passed their normal, traditional scoring, you got a loan. Didn't matter what your psychometric test result was. But, and here's the key, even if you were rejected by the traditional score, if you passed the EFL test, you still got offered a loan. The only people turned away were the ones who failed both. So, the loans went out, and the researchers just sat back and watched. They tracked who paid their loans back and who defaulted, and what they found revealed two completely different and really interesting stories. And that key difference all depended on one simple thing. Did the entrepreneur already have a credit history? The results for the banked versus the unbanked folks? Well, they couldn't have been more different.
Okay, first up, the people who already had a financial footprint, the banked. For them, the big question was, could this personality test act as a better filter? Could it actually help reduce the bank's risk?
And the answer? A huge, resounding yes. Banked applicants who passed the traditional score but were rejected by the psychometric test were 8.6 percentage points more likely to fall into serious delinquency. Now, in the lending world, that is an enormous gap in risk.
So what's the takeaway here? Well, for applicants who already have a credit history, this test works like a powerful second opinion. It helps the bank spot hidden risks that a traditional score might totally miss.
Okay, but what about everyone else? What about the entrepreneurs stuck in that catch-22, the unbanked, with no credit history at all? Could this test be the key that finally unlocks that first crucial loan for them?
And this is where the other side of the story gets really, really powerful. For this group, the test wasn't a filter to weed people out. It was a gateway to let them in.
It's pretty clear, right? For an unbanked applicant, passing that EFL test dramatically increased their chance of getting a loan. But here's the real kicker. It did all of this without making the bank's overall portfolio any riskier. It successfully found creditworthy borrowers that the old methods would have just completely overlooked.
All right, so let's zoom out for a second. What does all of this really mean for the future of credit?
Well, it suggests we might need to start looking beyond just the historical numbers that we're so used to.
So let's just quickly recap the big takeaways here. First, psychometrics isn't about replacing credit history. It's a powerful complement to it. Second, for lenders, it's a fantastic tool for reducing risk by flagging issues you wouldn't otherwise see. Third, for the unbanked, it's a game changer for getting access to capital. And finally, it offers a real practical solution to that nagging chicken and egg problem in finance.
And you know, the researchers who actually did this study, they summed it up perfectly. This isn't just some academic theory, it's a practical real-world solution, especially in economies where those traditional credit systems are still being built out.
And all of this leaves us with a fascinating, kind of wild question to think about for the future. As technology and data science keep evolving, could your personality one day be just as important as your payment history? Could it actually become your next credit score?